It's a pleasure to be here with all of you today at the first Investor Forum on Climate Change. A particular thank you to my friend Tessa Tennant, who facilitated this address. In the 1980s, the United States was racked by acid rain and smog. Acid rain comes from burning of coal and sulfur emissions and NOx that go into the air, combine with water, and cause the deadly effects. In a radical approach, in 1990, the United States Congress passed the Clean Air Act of 1990. It was the first widespread implementation of what is commonly known as cap and trade. The program was an incredible success. Acid rain and smog disappeared from those cities that they existed in during that decade. Total sulfur emissions in the United States went from 18 million tons in the decade of the 80s to 3.9 million tons last year. The medical savings alone last year were $170 billion. That's annual savings that come from reduced medical expenses associated with lung disease. Moreover, there were 35,000 lives saved in that year as well. This program, by any measure, has turned out to be, from a cost-benefit ratio, the most successful environmental program in history. While there's a lot of talk, and particularly in the capital of the United States, that cap and trade is dead, I'm here to tell you it's alive and well. It's alive and well, and there are 55,000 contracts of open interest, outstanding agreements to buy and sell on renewable energy certificates. Last week we traded the first solar renewable energy certificate on ice in New Jersey. And furthermore, we have RGGI, the Regional Greenhouse Gas Initiative, covering carbon emissions in the Northeast. But most importantly, California represents almost half of what is traded in the United States. California, as many of you know, is a trendsetter. It's a trendsetter in social media, personal computers, iPads, searches. It's also a trendsetter in the environment. And we believe that California could set the way and be expanded to become a national program. At 25,000 open interest and 9,000 futures, the California market, after only 5 months, is bigger in futures than lumber, oats, which are mainstay old line commodities. Furthermore, that program is going to be extended to Quebec, so it will become international. And the governor of California recently made a deal and signed an MOU with the government of China. So look out for California, and also look out for China. Just 5 days after this conference, the city of Shenzhen is going to be the first to launch a trading in CO2 emissions, the driver of global warming. Furthermore, there are 5 cities and 2 provinces that will join them in the short term, in Shanghai, in Beijing, and Tianjin. So be careful of the axis of China and California to lead the way in environmental movements. It's not only China and in Asia. India has an energy efficiency program and a national renewable standards portfolio. There's also a pending program in Korea, Japan, Kazakhstan, Mexico. So the notion of the demise of cap and trade should be dismissed because of what may be coming over the horizon. The granddaddy of all the programs is the European Union ETS. If you Google that today, you'll see hundreds of articles criticizing the European Union, but they all focus on price. Price is not the right measurement of the success of the program. It is a signal that generates behavior. Europe was supposed to decline by 8% in accordance with their own mandates. They went down by 17% in carbon emissions, well beyond their own standard. Everybody, or many, say, well, that's because of the slowdown. Well, if you look at the data, that's not true. The GDP of the European Union is now higher than it was before the Great Recession. The fact is that carbon emissions have dropped because people have switched fuels from coal to gas, instituted energy efficiency programs, and prices performed well. We don't get upset if high prices in wheat generate huge crops. We're happy with that, actually. And the high prices initially in the program change behavior. There is a question, and a reasonable question, that should be considered for open debate. Is the price high enough to generate further reductions in CO2 emissions? That is the subject of legitimate debate, and it could be addressed, for example, by tightening the reduction targets well into the future so the current economic slowdown is not affected. It also could be done with things like price floors. That's the way California is doing it. So there are fixes if we want to look prospectively, but looking back, the program has simply worked and done the job. Let me address in the final moments of this talk what I think will be the most important commodity of the 21st century, and that's water. It is the oil of this century. Basically, there are only 3 continents that are long water: North America, South America, and Europe. Africa is short. India is short. China is short. Water quantity and quality is the next most promising way that we can use markets to address important social issues. While we today really have surrogates for water trading, for example, a bushel of wheat is 155 gallons, chicken costs 500 gallons, and a steak is 1,800 gallons. We trade water through grain trading and food trading, but it's not an efficient way. If we're going to use markets to address social and environmental needs, we have to turn our attention to water. Thank you all very much, and it's a pleasure being here virtually with you.